Hello and welcome to Crux Investor. We caught up earlier today with Peter Secker. He's the CEO of Bacanora Lithium, listed here on AIM. They've raised some money recently, nearly $100 million. We asked him what he's going to do with it and the plans with their partner to get boots back on the ground in Mexico. If you want our thoughts and opinions on the topics we discussed today with Peter, you can find those at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There are summaries of other interviews that we've done just to save you some time. There are training courses to help you with your diligence process, commentary from experts from around the world on a variety of commodities and companies, and some superb weekly shows, and they're well worth viewing in their own right. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from trolling and abuse, and I hope you feel that sounds nice, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, be appreciated. Leave your comments below. We'll get back to everyone. And if you want to see precisely what we talked about today, do take a look at the list below. Peter, how are you doing, sir?
Good afternoon, Matt. How are you doing?
I am magnificent over here in the UK. Where in the world are you?
I'm in sunny Toronto, and it's a very sunny, pleasant 3 degrees. Nice day.
Pleasant 3 degrees. Very good, very good. Well, we haven't spoken since July. Where have you gone? You've gone from 23 to 42. That's not too shabby.
No, it's been a good year for us. It's been a good month. So we've been very busy. We're very, very happy with where we're at.
Yeah, you are. And we're going to get into some of the reasons why. What's your take on the macro at the moment? Because obviously lithium's gone on a bit of a rip for the last 3 months, particularly. Most of the gains from most of the companies have been in the last 3 months. What are you seeing out there?
I think it's the start of a very long cycle. I think you're seeing significant demand out of Asia, specifically China, for both EV and renewables. You're seeing huge demand out of Germany from the automotive industry. And obviously the US is just starting to gain ground with Tesla and the rest of the automotive space. So I think lithium has only just started, and it's going to be a cycle that lasts for at least a decade.
Yes. Do you put the credit at Elon Musk's door for bringing attention to the sector?
Initially, yes. I mean, he's a long-term believer. He's done a lot for the industry. But I think as we move forward, it's going to be the larger automotive players who have the defined infrastructure who's going to push it to the next stage. Okay,
well, I look forward to talking with you about that in a second. But first of all, before we do that, the customary 1-minute overview of the business for people new to the story, and then we'll pick it up from there.
Okay, thanks, Matt. Well, I mean, it's been a very transformational month for us. We completed fundraising that put $100 million in the bank and allows us to confirm that we're now fully financed for the Sonora Project. That's great news. It's been a long journey. Secondly, is we finalized the 50-50 JV with Gangfeng. So we now have a 50-50 partnership with one of the largest lithium producers in the world and a developed company that has significant expertise. And then finally, we actually put boots on the ground in Sonora. So we have a team on site doing early works on the project and getting ready to start construction in Q3 this year.
Brilliant. Okay. Well, look, I think let's start with the money side of things, because that is the enabler here. One, did you think you'd be at this stage now, or has that been thanks to the market, interest?
Well, I think we've been prompting the market for this for at least 12 months. We finished the early engineering work with Gangfeng. We moved down the detailed design. We moved into early works on site. So we've been telling the market and our shareholders that we were going to raise money early in 2021 for at least the last 12 months. But the market has helped us. But yes, this has been a long-term strategy.
Right. Okay. Can you just remind us of the terms of because there are 2 tranches of money here, really. 2 main tranches of money here. Let's talk about the placement into the market for us at 56. How did that go? Easy to raise money in this current climate?
It's never easy to raise money, but we had strong support from existing shareholders, which was nice. I mean, both Ganfeng and M&G came in, which was very nice. Great support from some new shareholders, both out of the UK and Europe. And also we were very lucky. We got great support from some of the retail shareholders, and almost 400 new retail shareholders that put money in. So yes, we had a lot of support, mainly out of UK, Europe, not so much out of US. So we're very happy with where we're at. Was it easy? We were oversubscribed, but yes, we wanted 65 million. So we got 65 million. And then Ganfeng are putting in another 30 on top of that. So that's almost $100 million.
Yeah, so but you did it at a sort of nearly 20% discount. I mean, how do you get to that pricing? Because was it just there hadn't been enough sustained gains in the marketplace, or is that fairly standard kind of discount?
I think it came back to what you said at the start. I mean, our share price had almost trebled over the last 12 months. So a lot of people had seen the continuous gain. We did a discount because it's nice to give a little bit back to people who've supported us. And I think that was a fair price, seeing as where we'd come from and where we want to go to.
Right. Okay. And then obviously Gangfeng following on fairly quickly with 31 million bucks. Theirs was done at what, 45p?
Yes, correct. Yes. So basically they came in at the same price as everyone else. They topped up. Then they're almost a 29% shareholder in the company. So we go forward with Ganfeng being a 50-50 joint venture partner in Sonora and being almost a 30% shareholder at the PLC level. So obviously significant support from them, which shows great support for the project.
You know, you're raising at different prices in quick succession. You've got Gangfeng now as I guess with this deal getting over there, 50-50 partner now. So it's impressive. But your shares kind of shot up on the initial excitement, have dropped back down to sort of what you'd say is a fair level, would you? 42?
I'd say compared where we were this time last year, it's a very fair level. And I think most of our long-term shareholders are very happy with that. What we have to do now is obviously perform. And we have a number of milestones over the next 2 years that says we start development in Q3 this year and we produce our first lithium in the middle of 2023, which is the objective of the whole fundraising.
Right. Okay. You're kind of happy with the way that kind of played out and leveled out.
Yes. I think if we had been sitting back at 22 cents as we were last year, then we would be unhappy. But where we are now, yes, we're very happy. We've got a market cap of almost 150 million pounds. I think that's a good point to be at.
Right. Okay. And just in terms of the raise, in terms of what that was based on, that was based on a previous feasibility study. Had you hoped to be using Gangfeng numbers by now?
No, we were happy with the feasibility. We always said that was a very realistic number. We have optimized it a little bit. We've dropped the capital costs from 420 million to just under 410. So we've had some upside with that. But in terms of, were we going to shave 30% off the capital cost of the project? No, that was never going to happen.
Right. Okay. But there was talk previously about Gangfeng putting some costing numbers together, which may help. Is there any line of sight in terms of timing around that?
I think what you'll see over the next few months is that we'll have a slightly larger project coming out at a higher revenue side for a slightly less amount of money. So I think there'll be a win-win both on the capital cost and the size of the project.
Right. And any clues there in terms of what you're going to be producing, carbonate or hydroxide?
And I think we've said for the last few years we're going to have flexibility. The market is trying to sort out whether it wants to be a hydroxide market or a carbonate market. I think for us, we need to have flexibility. Some of our customers want hydroxide, some want carbonate. So we'll be able to do both. Most importantly, it's got to be battery grade. That's our focus. And we have to produce at the lower end of the cost curve. So as long as we demonstrate the economics are maintained, higher production, lower capex, yes, flexibility is the key to this going forward.
Right. Well, that's an important point to make because, again, I think there's a lot of noise in the marketplace about, capturing more of the value down at the hydroxide end of the marketplace. But there's a lot of people wanting to be there or claiming that they're going to be able to get there. Not everyone's necessarily going to be able to insert themselves day one, whether it be for technical reasons, financial reasons, or being able to actually get contracts in place. So what sorts of conversations are you having with Gangfeng around this, or are they focused on more technical matters and less market?
I mean, they are at the moment not able to supply all of their customer base. I mean, there's a significant undersupply and over demand. They're saying that there's increasing demand for carbonate in China, based on obviously the battery types, the LFP in China, but also significant demand for hydroxide in both Europe and the US. So I think whether it's Ganfeng or whether it's us, we both want flexibility with the market moving forward.
Okay. And you're happy with that position? That gives you the flexibility or the agility to be able to respond going forward. And that's a deliberate thing.
That's a very deliberate thing. Yes. I mean, if you had been looking at the project 3 years ago, it was purely a carbonate project. And then, as you said, there was significant focus on hydroxide based on the driving range of some of these larger vehicles. And now very much a focus back on carbonate. And there's a squeeze on carbonate pricing in China. So yes, as you've seen the market move over the last 3-4 years, I think producers going forward have to have that flexibility moving forward.
Okay. And just one more on the finance. Last time we talked, you talked about the Red Kite facility. Do you feel that you're going to need to utilize that, or are you going to remove that?
No, at the moment, we're fully financed based on both the debt side and the equity side. So between the equity we have now in the bank and between the Red Kite facility, that's the full finance project. So no, that will stay in place. And obviously they've been very patient with us. So yes, they're a good partner to have.
Right. Okay. Fine. And it doesn't cost too much to maintain it.
Compared to some of the financings that have been done recently in the lithium space, I think it's a very reasonable pricing.
Okay, good. Okay, well let's get into the project, because that's the bit I think people are interested in. Okay, you've got boots on the ground. What have they been tasked with doing?
Well, first stage, obviously, when you start building, is to clear the site. So we have an environmental strategy in place. We have to clear the topsoil from the project site, and then we have to clear the subsoil and stockpile that and move it for the future. So that's the first stage. That'll be completed by end of April. Then access road. We have an access road to site, but obviously we have to upgrade that for heavy equipment and heavy vehicles. So that'll happen between now and the middle of the year. And then the main work will start Q3 when we go into bulk earthworks, which is excavating the foundations, and then concrete and civil work. And then structural work will happen after that towards the end of the year. So by the end of the year, we want to be out of the ground, have some of the structure in place, and look forward to receiving the long lead items that will arrive Q1 and Q2 2022.
Right. Okay. And where you are, and I've asked this question to mining companies in the same district. I just want to hear your version of it. Where you are in Mexico, and also I was on a Mexican conference where this was discussed, which is around security. Because the Mexican government is now, issuing mines the ability to rent police to help with security issues in certain parts of Mexico. Is that something that you're envisaging needing?
Where we are in Sonora, we've had very few security problems, and we've been working there now for the last 8 years. So I think it'll be a combination of civil security, which is the normal security forces in Sonora, which are, as you state-based, and we will have our own security on site, which is normal for any remote site. So a combination of both. But will we be renting soldiers to secure the workplace? No, that's not the plan.
Right. Okay. Well, let's get into an area which is dear to my heart, and I think it's relevant at the moment, which is around the sort of EIA, ESG, energy, and how you ensure your own credentials when plugging yourself into this EV ecosystem. This full supply chain is being monitored, tracked, traced. OEMs demanding it. These automotive manufacturers are demanding it. You're working with Gangfeng. Tell us what you're focusing on in regard to that topic.
Well, we look at the three, I guess, prongs to this. There's community relations. We've been working with the local communities in Sonora, and especially around the mine site for the last 6-7 years. We have a policy in place where we recruit locally. We have most of our workforce that's on site at the moment is from the local area. So strong community relations, and that will be maintained going forward. A lot of the contracts that we let will be with local contractors. A lot of the work that can be done on site by the actual local people themselves in terms of transport, catering, that sort of stuff will be focused on local supply. So community relations is very important to us. When you look at the carbon footprint, obviously we will source energy out of the US, so that's natural gas. So that's a lower footprint than say diesel or petrol. But in the future, we're looking to supply some of that energy through a solar installation, and we're looking at a solar lithium battery facility. That's down the track. So carbon footprint relative to most lithium projects is low. We don't have to drill and blast, so low energy impact there. We don't have to crush or grind, so low impact there. Single stage roasting, so low impact there. So we fit quite well on the carbon footprint towards the bottom left of the industry. And moving forward, yes, we will make sure that all our discharges are maintained on site. So we'll be a zero discharge site. All our water will be recycled, so tailings will be dry stacked and water returned to the plant. So we're trying to do everything we can to maintain as low a carbon footprint as possible.
Right, and permits, licenses, etc., all in order.
Correct. Environmental permit was issued 18 months ago. Water license was issued 12 months ago. Construction permits are in place. So yes, the work on the ground that we're doing now is leading to construction starting Q3 this year.
Okay, so you're an AIM-listed company with assets in the Americas, with a Chinese partner. Who's going to benefit from you producing whatever it is that you choose to produce going down the line? Where's it going to end up? Which ecosystem?
So in terms of customer base, it's predominantly Asia at the moment. And still, however you look at where the demand is, 90% of lithium batteries are made in the Asian market. So initially it will go to China, Korea, and Japan. But looking down the track, I mean, the US market is growing very, very strongly. The capacity to develop cathode and lithium batteries is growing fast. So I think downstream we'll look to supply North America when the market grows fast enough. And it'll be very much where our customers want it to be delivered. Ganfeng has contracts all over the world, so does Hanwha. So it'll be where the customers are focused. But yes, we'll maintain as short a supply chain as possible because it's good for both the carbon footprint and for the cost of delivery.
I mean, are you just choosing the path of least resistance because Gangfeng's your partner? They've got their own ecosystem. They've got their own clients they can walk you into. Are you going to bother looking at some of the other options available to you?
Well, the nice thing is that we have two off-takers. 50% goes to Hanwha Corporation, 50% goes to Ganfeng. So we've maintained a slight tension there between the two. Off-take agreements are similar. So yes, we want that ability to deliver to a couple of customers, but obviously Ganfeng is providing what we believe to be a one-stop shop. They're providing a technical support for the engineering. They've done all the lithium plant engineering. As they move off of the construction phase, they're doing in Argentina. Their team from Argentina will come to Mexico and do the construction of the project. And then obviously the most important, from my point of view, is commissioning. I mean, the highest risk for any project is finishing construction and getting as fast as you can into positive cash flow. And having Ganfeng with us with a construction team and then a commissioning team, I think that mitigates a lot of risk that people have considered that we pose.
I think I want to talk about the macro component a little bit, if you don't mind. I want your view on it because we've done some analysis of the amount of funding that's happened over the past 12 months. It's over $6 billion, right? There's some pretty big players in there raising, a vast majority of that. But I think the surprising thing to us was the rise of lithium clay or clay stone above brine, above DLE in that funding list. Does it surprise you?
Not at all. I mean, we've been telling this story now for 6 years. It's only just catching on. I mean, the life of the project is 250 years. It's a 250-year resource. It's scalable. I mean, we can start at 20,000 and get to 50,000 or 100,000 relatively quickly. And we sit at the bottom end of the cost curve. So we're sitting around that $4,000 per ton for a battery grade product. So how many projects do you know anywhere in the world that have a 250-year resource life, sit at the bottom end of the cost curve, can be in production within 18 months to 2 years, and produce a battery grade quality that will go straight to the cathode market? So yes, I'm not surprised. I'm surprised it has taken so long for people to catch on. But with any new technology, with any new mineral, it's education.
It is education, awareness, and etc. Absolutely, and I think people understand technically the problem can now be solved. I think from 12 months that's been a big shift for sure. But there's also a lot of new entrants into the marketplace. There are some players perhaps are all boats rise in a high tide. So scenario, you must look around and go, I think some of these won't necessarily get into production. I mean, that's going to be a sort of negative effect. And then you've also got people at the other end of that scale. We've had, a couple come on here, some significant claims made. One, it wasn't clay, claiming that they could supply the whole of the North American market for the next 100 years. I did say please don't, but that when you look at the way that the supply demand numbers are, for the next 10 years, clearly there's a need for it. But there's also a heck of a lot of people claiming a heck of a lot of production capability, which can come online in the next 5 years.
and I think 5 years is optimistic. I mean, I've been in this industry for a long time. I've been doing this for 40 years. The typical gestation period, whether you're Bacanora or whether you're BHP, is 10 years. From the time you put your first drill rig on site to you do your engineering and you do your permitting and then you do your feasibility and then you do your construction and then you do commissioning, that's a 10-year cycle. So anybody who says they're going to be producing in 5 years' time needs to have a defined project, needs to have done their engineering, and needs to be getting ready to construct in 2021, 2022. As far as I know, the only greenfields project that will go into construction in 2021 is Bacanora in the next 4 months. So anybody else who's going to be in production before 2024, they need to get their skates on, because that's a very aggressive time frame.
Okay.
But as you see, the market's growing from a current 350,000 tons a year to 2 million tons a year by the turn of the decade. So there's room for a lot of new entrants in the market.
There are, and there's a need, but they won't necessarily all work. So help me as an investor. What's my checklist that I should be looking for when I'm looking at investing? Apart from your good self, obviously, but what is the checklist?
You look at anybody who has access to existing infrastructure, because you want to be able to build a mine that can feed into an existing system rather than developing a whole railway or project infrastructure. So close to infrastructure, you have to have enough of a grip on the mineralogy and the metallurgy to know you're going to make a battery grade product. In the laboratory, anybody can make battery grade. It takes a couple of days and you can spit out a 99.5% product. We've been working our pilot plants in Sonora now for over 4 years. Gangfeng have been running their pilot plants for over a year. So you have to be able to demonstrate on a continuous basis that you can make a battery grade product at a price that fits at the lower end of the cost curve. So continuous repeatability, battery grade product, good infrastructure. And you want to have a project, Matt, that can be scaled, because as the market grows, you don't want to be a 20,000 ton producer for the next 20 years. You want to be able to grow with the market. So the person that you want to do that says they can supply the whole market, they're not going to come on stream supplying 100,000 tons a year. They're going to come on stream at a much lower scale, get into production, get the process working, and then grow, which is what we're going to do. So we're going to start at 20, hopefully go to 50, maybe look at 100,000 tons down the track. So scalability, cost curve, and most of all, product quality. Those are the three things you need to be looking at.
In terms of the asset, money, I'm thinking strategic partners, I'm thinking access to markets as well. Yeah, we've talked about that today and previously. In fact, I'll put a link to our previous conversation in here too. But not everyone's going to be capable of getting those things over the line quickly as well. I'm just trying to wonder what the barriers are for success. So I appreciate what you said about the asset. What else is on the list?
Well, financing. I mean, the average cost of production is $20,000 per ton of lithium production. So if you're a 20,000 ton producer, then you're a $400 million capex. That's a rule of thumb. So for a junior company, yes, you're right. You need a partner. You need a big brother. And we looked around, and Ganfeng fit that strategy very, very well, both in terms of a balance sheet. They're a $30 billion US company, plus they have 30 years of lithium experience behind them. Plus they are currently building a very similar project to ours in Argentina with a dedicated team. So yes, technical people, project skills, financing, that's fine. But I will come back to those other factors. You have to have the project behind you. If you have a project that lasts 5 years and can produce a subgrade material, that's great that you can fund it, but it's not going to be a long-term investment. So yes, we're looking at the long-term downstream strategy, and Sonora works very well for us.
Okay, AIM has been good to you. It's been very good to you, okay? And very supportive shareholders too. But when you look at some of these North American companies, possibly call them peers, they seem to be getting valuations far in excess of yours. Have you thought about coming over to the North American markets as part of the solution going forward? I mean, you've got a bunch of money now. You can afford it.
Sure. So we've thought about this. We've talked about this. I mean, AIM obviously has got us to where we are now and has been very good to us. There are other boards, obviously, in London. The main board in London is obviously where the bigger market cap companies sit. And I think our natural progression now is down the track to move to the main board in London. In terms of other jurisdictions, I think more importantly, let's get this project into production. Let's get a cash flow going. Let's get a cash flow multiple, and then you'll be far better, I guess, anticipated for listing on a secondary market. So yes, aim for the moment, main board London, and then we'll see what happens next.
Yeah. Okay. Well, best of luck with that. Appreciate the update today. Congratulations on the fundraise. Gives you lots of optionality in terms of how you choose to move forward, and of course we continue to look for announcements from you with regards to your technical success too. So appreciate your time today, Peter. Stay in touch, okay?
Thanks, Matt. Yes, it's going to be a good year for us as we move forward. We're now fully financed. We have enough money to do the construction and the commissioning and getting the positive cash flow. We have a strong partner behind us, and we have boots on the ground in Mexico. So yes, it's going to be a good year for Bacanora. It's going to be a great year for lithium. I'm looking forward to the next 12, 24 months.